So, one of the questions that clients ask all the time is which investment accounts are best used first in retirement? And unfortunately, the answer that we usually provide is it depends. It depends on a number of factors. But usually the process begins with an evaluation of your tax return because we want to see what tax rates are being assessed against your various different investment accounts. So usually people have one of or all three of different types of accounts. They have either retirement assets, so those that are in IRAs, 401ks, 403bs. They have money that's in a non-retirement account, stocks and bonds, mutual funds, those kinds of things. And then they have cash. So we first want to see how the various investment accounts are flowing through the tax return. So one of the things to keep in mind is in non-retirement accounts is that if you have investments in those accounts that are generating qualified dividends or capital gains, if your income is below $80,800 as a couple or $40,400 as a single person, you receive zero tax. You have to pay zero tax on your qualified dividends. So those are usually from U.S. stocks and also from capital gains. So first, we want to make sure that you take full advantage of a 0% tax rate. Then we want to look at the other end of the spectrum, and that is when you must start taking required distributions from your retirement accounts. Because if for those people who have a lot of money in retirement accounts, those retirement distributions the mandatory distributions at that point can be quite significant, and there can be a corresponding fairly high tax rate. So we'll want to look at all those kinds of things because it may actually make sense to pull money out of retirement accounts prior to age 72 to help levelize the amount of tax that you pay both now, before age 72, or after age 72. So, and the other facet of this is we don't want to use up any one particular type of account. So we don't want you to, use up all your cash, of course, even though you can pull out cash and really not have any tax implications. But we don't want you to use up all your non-retirement assets because, those assets are potentially good to have around later in life as well if you should need large chunks of money and things like that you wouldn't otherwise want to take out of retirement accounts and pay a even higher tax rate. So the answer to the question is it depends. We've got to look at the tax return and we have to do some projections around that and then advise on what's the best combination of accounts and how you should take the money out. So there really is, in many cases, no best account to use first in retirement. Very often it ends up being a hybrid type of approach. So I hope this little piece of information about how to generate retirement income is useful, and certainly we can do the calculations to help, make the question and help you make the right decision much easier as a result. Thank you.